Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, hi guys, welcome back to the channel. So, for those of you who are new, then you have come to the place where we talk about market profile. Now we know there are a lot of trading strategies, ideas, techniques, and we don't care about any of that. What we care about here is showing traders how it's actually done. 99% of traders don't know anything about market profile. Never even heard of it, never even seen it. So it's our job here to expose what professional traders do and use in the markets day to day. Now, of course, through some of my positions, some of my ideas, I'm hoping that you learn a lot. I have a free Discord server where you can come in with a community just like you, looking to find out and learn more and improve their trading. I offer a range of courses, and I also offer a range of free material that traders can go through so that they can better understand how we use market profile. Look, it's time, guys. People have gone down the rabbit hole of various different trading systems, ideas, and yet they can't find any structure in their trading today. So I'm hoping through some of the stuff that I do here helps you visualize how a professional trader forms some structure and is able to keep with the market. If I'm going to be brutally honest with you, it doesn't really matter whether you've been trading for 10 years, 20 years, 15 years, 5 years, 4 years. The fact of the matter is, the longer it takes you to develop structure in your trading, the harder it's going to be. And also, it doesn't matter how much experience you have, you're still going to be plagued with the same psychological challenges as everyone else. And that's because you don't have a very good frame of reference in order to execute your trades. You're relying on a lot of pattern recognition, which is great in some ways, but also pattern recognition means that the individual needs a lot of skill to constantly recognize and acknowledge the pattern. If any one of you guys have read a book by a guy called John Boyd, which jumps into the idea of OODA loop or neural loops, right, then you'd understand a bit better what I'm talking about. And I will implore you to go and have a look so you can build a picture of how psychologically difficult it can be to be a trader, right? So in this channel, it's all about showing, giving you an idea. It's all about giving you good principles so you can stay in the game and can succeed, as opposed to the Lambo trader stuff or the huge P&Ls which we all see but are not reflective of a trader's growth who might want to start small. Now, we do know, of course, if you're in the equity space and you trade equities, this channel may be for you or not for you, because I will show you exactly how I trade equities. But if you're in the equity space, then there's more of these stories, because stocks are a bit volatile and you've got small caps which have a different mind of their own, right? But if you're a futures trader or you trade currency or forex, then you want to watch this for sure, right? Because ultimately it will give you the kind of foundation you need to start looking at your own trading and deciding whether this is the pathway for you. Anyway, enough of the grim stuff. All right, so now I'm going to jump into my portfolio and I'm going to talk to you guys about what I'm doing at the moment and so on. And I always flash my portfolio on the screen just so you have an idea of how I allocate and why it's important to me to allocate in this way. All right, so as I always say to traders, you don't have to trade big to make money. You can trade a small, diversify properly, and you're still going to get an overall good outcome. You're going to be able to manage your losses a lot easier. You're going to be able to cut them easier. and you're going to be able to allow those winners to run. You're going to be able to trade around a core position, for example. So all these techniques that professionals use, but no one knows how they actually use them because no one's ever telling you that bit, I'm going to be able to show you here. Okay, so let's take a look at the Aussie dollar. So this week, largely, I was expecting a gap fill. Been entirely wrong. This is a position I've had to cut, as you guys would have seen from my portfolio, how it developed through the week. I've had to get rid of it. All in all, it's been interesting. I'm structurally bullish on the Aussie, as I always say. I do still think that we're looking at a turnaround maybe late in the week. We might close mid-value. It's going to cause a lot of dynamic shifts here. Now, traditionally, we tend to get a bit of range on the Aussie, so I'm expecting maybe a late move on Friday. Other than that, it means we're going to balance. Now, that will be interesting because we've got a bid stack on the downside, so I would look for plays to fill the gap next week for sure. So it's a good opportunity here to trade value, maybe trade for the gap too. So if we can clash into bids and rebound, it becomes a great structural trade. So I'll definitely pay attention to this for next week, but this week it is not a jam. We definitely had to jump out of this one. Crude oil, I've got, so as you can see, I was long on this very early, and you'll be able to see that from my portfolio, which I'm flashing on the screen now. So I've been long early in crude. This has been developing for a while. It's been slightly smaller positions. I was thinking about doing this as a value trade and maybe leveling up a little bit, taking a bit more risk in there, adding to those initial positions, and then going for the value trade. But because I'm going for a much longer drive, because I'm structurally a little bit more bullish, at least in the midterm with crude, we got EIA today, so I'm actually doing this video a little bit ahead of time, because I do think that structurally, historically as well, when we see crude oil move, especially through prior value against the week, we tend to get a good run. So, and again, when we think about natural range, I think the offer stack should hold us back a bit, but that's like 75, 76 a barrel. So pretty interesting for me anyway on crude. With commodities, we tend to get a little bit more in terms of outlier movements. So we kind of get these big expansive moves, and volatility is very unpredictable in the commodity space. So I tend to look at natural range in terms of what's the minimum natural range to expect. And if we look at these weeks here, we can actually see that, okay, there have been weeks where we haven't got enough range, but trade location is most important. Obviously, we can see that we had a competitive buyer to the downside, a bid stack, and we did trade up to value high, found some support, a bit of a retreat, and now we're going back there. So there's every indication that we're bullish. We got a slight offer stack here, but we're trading within that moment. We did get some slight, in my opinion, responsive selling. I think these are sellers traps, and if we can trade out Q period, that is pretty much it. We're going to get a breakout. So I will pay attention for that coming into EIA. Is this double distribution forming here and looking for the upside? Right, so again, you wanted to be early in this one, which I was in the dip back into value low going back a few weeks, and the competitive buyers just gave me the edge that I needed to be able to be long this. So again, any more extension is just more money for me at this stage. I think once we start to trade into the office stacks, some money management techniques is maybe to roll your stops to even, for example, or just make that position risk free largely. Not everyone likes doing that, we understand that, but at the same token, it could be a way of at least protecting your psychology, because I think that aspect still remains quite important when we trade. The S&P 500, I did say that to you guys. If you look at my prior videos, for those of you who are watching this for the first time, just double back and have a look at my videos that I did on this. You would say I did say to you guys, I'm structurally bullish on the S&P. I mean, this consolidation here meant that I was looking for an upside drive. I think we're starting to see that now. We're trading over bids. It's normally a good sign. We really built up here. I'm expecting some extension again late into the week. To kind of play that out, I am long the S&P, have been for some time. I'm also short puts on the options plays, and we'll talk about that later on. But again, options for me, selling premium is a way to guarantee income. One of my philosophies about trading is that we need to be making money. There is no point if you're taking back-to-back losses consistently over long periods of time. You're just not growing. So you have to get to a place that you can grow. Trading is a business, and if your business isn't generating revenue or profits for you, you need to start figuring out a way to get it to do that. There is no passive way to do this. There's no way you can just say, well, time will heal this wound, because it genuinely doesn't. In order to be profitable, you got to find your own way to be profitable. I mean, for me, selling premium was a very key part of adding to that profitability. I took the very hard demote road of trying to be profitable solely trading leveraged assets, and it's very different. As you can see, the tools I use now are like very, very high level tools. I built this market profile for my MT4. I have a philosophy as to why I'm interested in CFDs as opposed to just trading on an exchange. I do have access to this, however I choose to use CFDs because there's not only are there tax benefits, but there's so many other benefits you get when you're accessing a contract for difference. It's a little bit more, I wouldn't say it's cheaper, it's a little bit more there's a little bit more cost there, but there's an added benefit that kind of repairs that cost for me, so it's not a big deal. I like to have the leverage as well to trade into these things, which means that you don't have to overcommit capital in order to make the kind of gains that you want. What you do need to make sure is that you're well capitalized to trade leveraged assets. It's one of the biggest mistakes most traders make is they're not capitalized enough, so they're gonna eventually lose all their money. So again, if you're not, try and diversify well, and I show you how to do that even if you were trading a smallish account, right? Because I like to consider that what I'm playing with for CFDs is a smallish account, but on the same token, if you're trading a very large account, then again, the same rules should literally apply. There is no reason why you can't cut it trading leveraged assets, but for me, I believe in guaranteed income. So one of the things I look at is selling premium. That guarantees me a degree of income or a degree of growth at the very least in my larger funds. This means that I can pay myself every week or every 2 weeks at the very least, and I can take the edge off, right? Which means that I can chill. I can actually start to focus on my skill set to make my leverage trading better. Leverage trading is a lot harder because we're putting stops in. We're essentially monitoring that risk in a very tight way, and it's not in the same way that we deal with option premium. So again, it's just one of those philosophies. So if you marry all those philosophies together, then you tend to get a very, very, very good result. All in all, you'll be happy with your trading. Everything needs to add up. It's a business. So my option side is generating revenue, my leverage side is generating revenue, maybe not as much revenue as my option side, but that's fine. What I'm interested in is the revenue. When I add it up over the week, over the month, it works out, and that's what I care about. Again, guys, I do one-on-one tuition as well, so if you guys want to know how I do things and how I can build you into a trader you're going to be happy with, then you should probably check that out. Okay, so again, if we go to gold, again, we're bearish on this one. I'm structurally bullish on gold on the macro, but I did say that there's a lot of room to fall with this asset. We could easily be down at 1800 an ounce. Personally, we're trading this value now. When we think about natural range, I won't rule out a drop into 1954 before we close the week. So again, some dollar strength playing out here against these assets. Well, I wouldn't say it's dollar strength. I would like to say it's a dollar weakness, right? So again, I'd like to say, I say dollar weakness, don't I? I'd like to say it's gold weakness as opposed to dollar strength, right? Because we can actually see the risk assets like the equities, for example, are performing really well, and some of these safe havens are not. So the dollar is kind of the in-between go-to. So again, it's important to identify some of the correlations and who's the weaker asset. So what's the best thing to short? This week we actually spoke about the dollar yen, which I'll come to. So let me just take a skip here. Cable, again, we're trading a little bit lower. There's a gap left to fill. I think next week we should pay attention for value trades and a play for the gap for sure. So again, at cable, I was slightly wrong on this. So this goes along with the Aussie. This was some of the positions we had to shave off. Of course, dollar yen, pretty strong at the moment. Dollars looks like a powerhouse against the yen, but it's really yen weakness. So we're seeing the same thing we're seeing with gold. So gold and yen are the weaker assets this week. So again, if you were going to sell anything, it had to be the yen. We had a long dollar yen position, which we cut to take some profits. Again, it's just how we balance our portfolio. Again, I could have carried this a lot longer. I was structurally bullish on the yen, but again, we opted to cut. Right, again, it's similar idea with our sterling yen position. Now again, we opted to cut that one as opposed to let it run, even though there was massive potential here for us to develop a yen position. So again, it was just a way of balancing the portfolio to ensure that we're taking some money off the table as we were cutting out trades that weren't doing very well. Again, dollar CAD, I'm structurally bearish on this one. I do have a short position, so I re-entered my dollar CAD, but again, we're kind of middle on the park on this one. I am looking forward to a drop here, maybe a trade through value. We fill the gap, so there's no inefficiency. We're now trading into a bid stack. So again, it's all very uncertain. We could easily see the dollar take the CAD weaken, but because I'm structurally bearish, I'm looking for more downsides. We had a strong offer stack initially earlier on in the week. We sold this back, covered. We sold again, covered, and now I'm re-entering for a downside. I just wasn't sure that we were going to track all the way, so it made sense to manage that position. So again, we did take money off the table. Bitcoin, I'm structurally bullish, did say that. We did take in some competitive buying in J period. Now we're doing a value trade, but we do have an offer stack here. The build up is telling me that if we break, we're going to get a pretty strong break. So Bitcoin's looking really interesting, but at the moment we're where I like to call inside value. There's only a value trade in this for me until I can see a little bit more interest in the upside. So for now, I think either I'm late on Bitcoin, in which case I'm not going to get involved. I like to see a bit more of a bigger dip, and we haven't seen that yet. So let's see if we start to build structure here, break some balances. It might be something I might add for a value trade in the week. We get some really good value trades out of Bitcoin, so I think that because of that asset's volatility, it's a very interesting asset to play. So I'll pay attention to that at the moment. Sterling yen, again, structurally bullish. I mean, sterling yen is in a massive bullish framework. Any dips here would be a good idea to buy. I do want to see how we shape up to next week. Are we going to dip back into the bid stack? If we do and find support, I'd look to go long on a final run for me for sterling yen before we start to take some downside action. Again, trade location wise against the week, it's not so great. These were the best trade locations, but again, you can see there were massive buy the dip opportunities. And again, if we look at those weekly lows, we've really held up against them. We could do really well. Again, one of the benefits here with the profile is being able to execute in a longer time frame, in essentially executing a shorter time frame, looking at a longer viewfinder without having to do a top-down view approach. I can see my profiles on the week, so I'm looking at the weekly macro here, and I can also see where I want to execute via the rotation, which is obviously the auction itself within the statistical benchmarks of that week. So for example, I called sterling yen long because we were trading a value low, and I said to everyone, well, it's a good time to buy and I'd want to be long. And then we pushed up to the upside and covered up here because we were trading into an offer stack and I just wasn't sure. We still haven't quite got out of that yet, so again, it may stand that I've made the best decision for this week. If we go and pull back, I'll look to buy again to go long. So again, it's just a way of managing our trades, guys, and that's how we stay profitable. The Kiwi, I'm long on this one. Again, I'm looking for a gap fill. We're building here. What we do need is a bit of a lift between now and Friday. If we get that, we're going up. If we weaken here and hold, then I'll look for that next week. Either way, I've got risk in a good place, so I'm just going to monitor this week as the holding level. If we start to pull back and trade back into the balance of this week, then we have to assume we're going for bids, right? In which case we need to jump out of this and look at a reaction at bids. But for now, we're going to stay long, and that's just the way we keep exposure to some of those commodity dollars that we had to shave off this week. Again, had to get out of the Aussie, had to get out of cable. So by having the Kiwi there, we're still creating exposure there in case we do get a quick run on risk assets. Remember, I'm also short dollar CAD. So again, I've got a lot of risk exposure. So if these things start to go a little bit wonky, I look to manage them and look to see what I can get in their place. Right, so once again, that's kind of the breakdown in where I'm positioned. So hopefully this made a lot of sense. I've made it pretty quick this week, or what I should say today, just because I wanted to give you guys an opportunity to kind of let's see how we end the week. There's no exciting plays at the moment. I mean, we're just looking to see how we end the week. Most of the movement has been done, and depending, we can see how our portfolio closed for the week. But largely, I'm up. Again, equity wise, not doing too bad based on what we've taken off the table. I would like to say we're sitting pretty. What we need to see is a bit more expansion, and we're going to get some really good growth on our account going into the next week or two. So that's how we need to play it, guys. But to my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?